Question 1. Topic: Claims handling and adjustment process. If an Arkansas insurance adjuster is handling a property damage claim and the insured disputes the value of the damage, what should the adjuster do according to Arkansas insurance regulations? A. Proceed with settlement based on the adjuster's assessment regardless of the dispute. B. Inform the insured that they can seek arbitration or litigation as the next step. C. Request that the insured submit a new claim with updated documentation. D. Offer the insured an option for an appraisal process to settle the disputed amount. Answer: D. Offer the insured an option for an appraisal process to settle the disputed amount. Explanation: under Arkansas insurance regulations, if there is a dispute over the value of a claim, the adjuster must offer an appraisal process as an alternative to litigation or arbitration. The appraisal process allows each party to select an independent appraiser who will assess the damage, and if they disagree, an umpire can make the final decision. This process is intended to be quicker and less expensive than formal litigation. Option B would be valid if the appraisal process fails but is not the immediate step. Option C is incorrect, as resubmitting a claim is not necessary in a dispute over valuation. Option A would violate the insured's rights to dispute a claim under the Arkansas Insurance Code. Question 2. Scenario: automobile insurance. Mr. Taylor was involved in a car accident in Arkansas where he hit a parked car. The parked car owner is claiming property damage, but Mr. Taylor is unsure whether his auto insurance will cover the claim. He has Arkansas's minimum auto liability limits and also carries uninsured motorist coverage. What should Mr. Taylor expect from his policy regarding this claim? A. His property damage liability coverage will pay for the damage to the parked car up to the policy limit. B. His uninsured motorist coverage will pay for the damages to the parked car. C. His insurance will not cover the damage since it was a parked vehicle. D. The parked car's owner must use their own insurance to cover the damage first. Answer: A. His property damage liability coverage will pay for the damage to the parked car up to the policy limit. Explanation: in Arkansas, liability coverage is mandatory and covers property damage that the insured driver causes to another party's vehicle or property. Mr. Taylor's property damage liability as part of his auto insurance will cover the damage to the parked car up to his policy limits. Uninsured motorist coverage, option B, is designed to cover Mr. Taylor's expenses if he is hit by an uninsured driver, not to pay for damage he causes. Option C is incorrect because liability covers damages even to parked cars, and option D would violate Arkansas law that holds the at-fault driver's liability insurance responsible first. Question 3. Topic: Commercial General Liability CGL insurance. Which of the following is true about coverage at ECA Commercial General Liability CGL policy in Arkansas? A. It covers advertising injury claims made by competitors. B. It provides coverage for bodily injury and property damage resulting from the insured's operations. C. It only applies to claims that occur after the policy's expiration. D. It includes coverage for pollution-related incidents. Answer: B. It provides coverage for bodily injury and property damage resulting from the insured's operations. Explanation: coverage at ECA Commercial General Liability CGL policy is designed to cover bodily injury and property damage arising from the insured's business operations. This is a foundational part of CGL policies, protecting businesses against claims of harm or property damage caused by their actions or negligence. Option A is incorrect, as advertising injury is covered under coverage B, not coverage A. Option C is incorrect because the coverage applies to incidents during the policy period, and option D is incorrect because pollution-related incidents are typically excluded unless a specific endorsement is added to the policy. Question 4. Topic: Workers' compensation insurance. In Arkansas, which of the following employees would typically be covered under mandatory workers' compensation insurance? A. An independent contractor hired for a single project. B. A seasonal worker employed by a small agricultural business. C. A full-time employee working in a retail store. D. A sole proprietor with no additional employees. Answer: C. A full-time employee working in a retail store. Explanation: in Arkansas, workers' compensation insurance is required for most employers with 3 or more employees, regardless of the industry, including full-time employees in retail businesses. Option A is incorrect because independent contractors are generally not covered under workers' compensation. Option B is incorrect as agricultural workers can have different exemptions depending on the size and type of business. Option D is incorrect because sole proprietors are typically excluded from mandatory coverage unless they opt into the system. Question 5. Scenario: automobile insurance. Uninsured motorist coverage (MS). Davis was involved in a hit-and-run accident in Arkansas where the other driver fled the scene, leaving her with vehicle damage and medical bills (MS). Davis has both collision and uninsured motorist coverage. What is the most likely outcome regarding coverage for her damages? A. Her uninsured motorist coverage will pay for both the vehicle damage and her medical bills. B. Her collision coverage will cover the vehicle damage, and her uninsured motorist coverage will cover her medical bills. C. Her uninsured motorist coverage will pay for the vehicle damage only. D. She will have to pay out of pocket because the other driver is unknown. Answer: B. Her collision coverage will cover the vehicle damage, and her uninsured motorist coverage will cover her medical bills. Explanation: in Arkansas, if MS. Davis has both collision and uninsured motorist coverage. Her collision coverage will handle the vehicle damage, while AUM coverage will apply to her medical bills. Uninsured motorist coverage is designed to cover bodily injury when the at-fault party cannot be identified or lacks sufficient insurance. Option A is incorrect because uninsured motorist coverage generally does not apply to property damage unless specifically endorsed. Option C misrepresents the function of coverage in Arkansas, and option D is incorrect because MS. Davis has relevant coverage in place to avoid out-of-pocket expenses. Question 6. Topic: Professional liability, errors and omissions. Which of the following situations would most likely be covered under an errors and omissions EO insurance policy? A. A car accident caused by an employee while driving a company vehicle. B. A mistake made by an accountant in filing a client's tax return resulting in penalties. C. Bodily injury to a client visiting a business premises. D. Property damage caused by a contractor during a renovation project. Answer: B. A mistake made by an accountant in filing a client's tax return resulting in penalties. Explanation: Errors and omissions EO insurance, a type of professional liability insurance, covers claims arising from mistakes or negligence in the delivery of professional services. In this case, the accountant's error in filing a tax return would be covered under EO insurance. Option A is incorrect as this would typically fall under auto insurance, while option C is a premises liability issue covered by general liability insurance. Option D would be covered under a contractor's general liability policy, not EO insurance. Question 7. Topic: Umbrella and excess liability insurance. Which of the following best describes the purpose of an umbrella liability policy in Arkansas? A. To provide extra coverage only for property damage claims. B. To cover claims that are excluded from standard liability policies without any exceptions. C. To provide additional coverage above the limits of underlying policies for both property and liability claims. D. To replace primary insurance policies when they are cancelled. Answer: C. To provide additional coverage above the limits of underlying policies for both property and liability claims. Explanation: Umbrella liability insurance provides additional coverage that extends beyond the limits of the insured's primary policies, e.g., auto or general liability, and applies to both property and liability claims. Option A is incorrect because umbrella insurance covers more than just property damage. Option B is incorrect because umbrella policies still have exclusions. Option D is incorrect as umbrella insurance supplements, not replaces, primary insurance. Question 8. Topic: Contract law in insurance. Which of the following would be considered a representation rather than a warranty under Arkansas insurance law? A. A statement by the insured guaranteeing that their property has an alarm system. B. A promise by the insured to maintain the insured property in a specific condition. C. A statement made by the insured on the application indicating they have not had any claims in the past 5 years. D. A condition requiring the insured to notify the insurer of any major repairs to the property. Answer: C. A statement made by the insured on the application indicating they have not had any claims in the past 5 years. Explanation: A representation is a statement made by the insured that is believed to be true to the best of their knowledge at the time of the insurance application. Option C describes such a representation. A warranty is a guarantee or condition that must be met, which applies to options A, B, and D as these involve specific promises or conditions that affect the validity of the policy. Question 9. Scenario: Commercial general liability. Coverage A. Mr. Richardson owns a small construction business in Arkansas. One of his employees accidentally damages a client's property while installing equipment. The client demands compensation for the damage. Under Mr. Richardson's commercial general liability (CGL) policy, how is this likely to be handled? A. The damage will not be covered as it was caused by an employee. B. The CGL policy will cover the property damage as it falls under coverage A. C. The CGL policy will only cover the damage if the employee is sued directly. D. The CGL policy will cover the damage only if Mr. Richardson was personally involved. Answer: B. The CGL policy will cover the property damage as it falls under coverage A. Explanation: coverage A commercial general liability (CGL) policy covers bodily injury and property damage that results from the insured's operations, including the actions of employees, as long as the damage occurred during the course of the business's operations. The CGL policy will cover it. Option A is incorrect because employees' actions are covered under the business's liability. Option C and D are incorrect because the coverage applies regardless of whether the employee is sued or if the owner was involved personally. Question 10. Topic: Unfair claims practices. Which of the following would likely be considered an unfair claims practice under Arkansas law? A. Denying a claim based on a policy exclusion clearly stated in the policy. B. Failing to acknowledge a claim within a reasonable time frame. C. Offering to settle a claim for less than the amount demanded by the insured. D. Investigating a claim to determine its validity before approving payment. Answer: B. Failing to acknowledge a claim within a reasonable time frame. Explanation: under Arkansas law, failing to acknowledge a claim within a reasonable time frame is considered an unfair claims practice. Insurers must respond promptly to claims to ensure timely processing. Option A is incorrect because denying a claim based on a policy exclusion is valid if the exclusion is clear. Option C is also not considered unfair, as settlement negotiations are part of the claims process. Option D is incorrect because insurers are required to investigate claims before making a payment decision to prevent fraud. Question 11. Topic: Liability insurance. Bodily injury. An Arkansas business is sued for an injury that a customer sustained on its premises. Which of the following must be proven by the injured party for the business to be held liable? A. The business had a legal duty to ensure absolute safety on its premises. B. The customer was injured due to a risk that was unforeseeable by the business. C. The business breached its duty of care by failing to address a known hazard. D. The customer was partially responsible for their own injury. Answer: C. The business breached its duty of care by failing to address a known hazard. Explanation: in Arkansas, for a business to be held liable in a bodily injury claim, the injured party must prove that the business breached its duty of care, such as by failing to address a known or foreseeable hazard. Option A is incorrect because the business is not required to guarantee absolute safety, only reasonable care. Option B is incorrect because the business is liable for foreseeable risks, not unforeseeable ones. Option D is incorrect, as Arkansas follows a modified comparative fault rule, meaning the injured party's negligence could reduce the claim but does not negate the business's liability. Question 12. Scenario: workers' compensation. Temporary versus permanent disability. MS. Taylor, an Arkansas factory worker, suffered a back injury at work and is unable to perform her job for an extended period. Her doctor expects her to return to work in 6 months. Based on this information, what type of benefit is MS? Taylor most likely to receive A. Temporary total disability benefits. B. Permanent total disability benefits. C. Permanent partial disability benefits. D. Temporary partial disability benefits. Answer A. Temporary total disability benefits. Explanation: in Arkansas, workers' compensation provides temporary total disability (TD) benefits to employees who are temporarily unable to work due to a workplace injury but are expected to recover and return to work. Since MS. Taylor's injury is not permanent and she cannot work during her recovery, she would receive TTD benefits. Option B is incorrect because permanent total disability applies to injuries that permanently prevent any future employment. Option C applies to permanent injuries that limit but do not entirely prevent work, and option D applies to cases where the worker can perform some job duties during recovery, which is not MS. Taylor's situation. Question 13. Topic: Arkansas Insurance Code. Unfair claims practices. Which of the following actions by an insurer would be considered a violation of Arkansas Unfair Claims Settlement Practices Act? A. Denying a claim based on an investigation that found the insured was at fault. B. Failing to provide a reasonable explanation for the denial of a claim. C. Delaying a claim payment for 30 days while waiting for supporting documentation. D. Paying a claim in full but disputing the insured's account of the incident. Answer: B. Failing to provide a reasonable explanation for the denial of a claim. Explanation. Under the Arkansas Unfair Claims Settlement Practices Act, insurers are required to provide a reasonable explanation for the denial of a claim. Option B describes a violation of this requirement. Option A is incorrect because an insurer can deny a claim based on an investigation that finds the insured at fault. Option C is incorrect because insurers are permitted to delay payments while waiting for necessary documentation. Option D is not a violation as long as the claim is paid appropriately even if there is a dispute about the details of the incident. Question 14. Topic: Personal auto policy. Uninsured underinsured motorist coverage in Arkansas. How does uninsured motorist coverage differ from underinsured motorist coverage in a personal auto policy? Their coverage applies when the at-fault driver has no insurance, while UIM coverage applies when the at-fault driver has insurance but in sufficient limits. Coverage applies only to vehicle damage, while UIM coverage applies only to bodily injury. CUM and UIM coverage provide identical protection but with different premiums. DUM coverage is required by Arkansas law, while UIM coverage is optional. And so AUM coverage applies when the at-fault driver has no insurance, while UIM coverage applies when the at-fault driver has insurance but in sufficient limits. Explanation. Uninsured motorist coverage in Arkansas applies when the at-fault driver does not have insurance, while underinsured motorist coverage applies when the at-fault driver has insurance but their liability limits are insufficient to cover the damages. Option B is incorrect as both and UIM can apply to bodily injury and vehicle damage depending on the policy. Option C is incorrect because the coverage differs, not just the premiums. Option D is incorrect because both and UIM coverage are optional in Arkansas, though they must be offered to the policyholder. Question 15. Scenario. Contract law. Misrepresentation. Mr. Spencer applied for auto insurance in Arkansas and stated on his application that he had no prior accidents. Later, the insurer discovered that Mr. Spencer had been in a minor accident 2 years ago. What legal principle would most likely apply in determining whether the policy remains valid? A. Estoppel. B. Misrepresentation. C. Waiver. D. Fraud. Answer. B. Misrepresentation. Explanation. Misrepresentation occurs when an applicant provides false information that influences the insurer's decision to issue a policy. In this case, Mr. Spencer's failure to disclose his prior accident could be considered a misrepresentation. If the misrepresentation is material, significant to the insurer's risk assessment, the insurer may have the right to void the policy. Option A is incorrect because estoppel refers to preventing a party from asserting a claim or right due to prior actions. Option C is incorrect because waiver refers to voluntarily relinquishing a known right, and option D is incorrect because fraud requires intentional deceit, which may not apply here. Question 16. Topic: Professional liability. Malpractice insurance. Which of the following professionals is most likely to need malpractice insurance as part of their professional liability coverage in Arkansas? A. A construction contractor. B. A doctor operating a private medical practice. C. A real estate agent. D. An accountant preparing tax returns. Answer. B. A doctor operating a private medical practice. Explanation. Malpractice insurance is a form of professional liability insurance that specifically covers professionals like doctors and other healthcare providers from claims arising from their professional services. Option B is correct because doctors are particularly at risk for malpractice claims. Option A is incorrect because contractors typically need general liability insurance. Options C and D are incorrect because while real estate agents and accountants need errors and omissions insurance, this is not considered malpractice insurance. Question 17. Topic: Arkansas-specific casualty insurance laws. Minimum liability limits. What is the minimum amount of bodily injury liability coverage per person required by law in Arkansas for personal auto insurance? A. $15,000. B. $25,000. C. $30,000. D. $50,000. Answer. B. $25,000. Explanation. Under Arkansas law, the minimum bodily injury liability limit for auto insurance is $25,000 per person and $50,000 per accident. Option A is incorrect because $15,000 is below the state minimum requirement. Options C and D are incorrect as they exceed the mandated limit, though policyholders can choose higher limits for additional protection. Question 18. Topic: Policy structure and forms. Exclusions. Which of the following is a common exclusion in a standard Arkansas personal auto insurance policy? A. Damage caused by vandalism. B. Accidents caused while driving for a rideshare company. C. Damage caused by hail. D. Theft of the insured vehicle. Answer: B. Accidents caused while driving for a rideshare company. Explanation: most personal auto insurance policies exclude coverage for accidents that occur while the vehicle is being used for commercial purposes, such as driving for a rideshare company. To be covered for rideshare activities, drivers typically need a commercial or rideshare-specific endorsement. Option A and C are incorrect because vandalism and hail are generally covered under comprehensive coverage. Option D is incorrect as theft is usually covered under comprehensive coverage as well. Question 19. Scenario: claims handling, investigation and proof of loss. Mr. Phillips filed a claim with his Arkansas home insurance company after a tornado severely damaged his house. The insurer requests proof of loss. Which of the following actions would be most appropriate for Mr. Phillips to take next? A. Provide the insurer with a detailed list of damages and any supporting documentation. B. Wait until the insurer completes its own investigation before submitting any paperwork. C. Immediately demand a settlement offer without providing any additional documentation. D. Dispute the insurer's request as it is not his responsibility to prove the loss. Answer A. Provide the insurer with a detailed list of damages and any supporting documentation. Explanation: in Arkansas, after a claim is filed, the insured is typically required to provide proof of loss, which includes a detailed list of damages and supporting documentation such as receipts or estimates. This documentation helps the insurer assess the extent of the damage and the appropriate amount to pay on the claim. Option B is incorrect because it is the insured's responsibility to provide proof of loss before the insurer completes its investigation. Option C is incorrect because demanding a settlement without supporting documentation would not comply with policy terms. Option D is incorrect because it is the policyholder's duty to substantiate the loss as outlined in most insurance contracts. Question 20. Topic: commercial general liability. Coverage A. In Arkansas, which of the following would most likely be covered under the coverage bodily injury and property damage liabilities section of a commercial general liability CGL policy? A. A lawsuit arising from a defective product that caused injury to a consumer. B. An employee injured while operating machinery at work. C. Damage to the insured's own office building from a storm. D. Losses related to the insured's breach of contract with a client. Answer A. A lawsuit arising from a defective product that caused injury to a consumer. Explanation: the coverage A under a CGL policy covers bodily injury and property damage to third parties, such as injuries caused by defective products. Option B is incorrect because injuries to employees are generally covered under workers' compensation, not the CGL. Option C is incorrect because damage to the insured's own property would be covered under a property insurance policy, not the CGL. Option D is incorrect because breaches of contract are not typically covered under liability policies unless specific provisions or endorsements are added. Question 21. Topic: personal auto policy, medical payments coverage. Which of the following is true about medical payments coverage under personal auto policy in Arkansas? A. It covers medical expenses for the insured and passengers regardless of fault. B. It covers medical expenses only if the insured is not at fault. C. It covers lost wages for the insured after an auto accident. D. It covers medical expenses for pedestrians struck by the insured vehicle but not the insured or passengers. Answer A. It covers medical expenses for the insured and passengers regardless of fault. Explanation: medical payments coverage (MEPA) under personal auto policy in Arkansas covers medical expenses for the insured, their passengers, and sometimes pedestrians regardless of fault in an accident. Option B is incorrect because fault is not a factor in MedPay coverage. Option C is incorrect because MedPay only covers medical expenses, not lost wages. Option D is incorrect because MedPay covers both the insured and their passengers, in addition to pedestrians in some cases. Question 22. Scenario: business interruption insurance. Coverage trigger: an Arkansas restaurant was forced to close for several weeks due to a fire. The business owner files a claim under their business interruption insurance policy. What must the owner prove in order for the claim to be approved? A. That the business experienced a substantial loss of profits during the closure. B. That the interruption was caused by physical damage to the property covered under the policy. C. That the fire was caused by negligence of an employee. D. That competitors did not experience similar losses. Answer: B, that the interruption was caused by physical damage to the property covered under the policy. Explanation: business interruption insurance typically requires that the business be forced to close due to physical damage to cover properties such as fire or storm damage. Option A is incorrect because while loss of profits may be compensated, the key factor for coverage is physical damage, not the level of profit loss. Option C is incorrect because the cause of the fire, negligence, or otherwise is not typically a factor in determining coverage under business interruption policies. Option D is irrelevant as the losses of competitors do not affect the insured's claim. Question 23. Topic: flood insurance. National Flood Insurance Program. Which of the following is true regarding flood insurance in Arkansas under the National Flood Insurance Program? NFIP. Standard homeowners insurance policies cover flood damage, making an FIP optional. B. NFIP is only available to property owners in designated high-risk flood areas. C. NFIP policies have a 30-day waiting period before coverage takes effect unless purchased in connection with a mortgage. D. Flood insurance under NFIP covers damage caused by sewer backup unless the backup is directly caused by flooding. Answer: C. NFIP policies have a 30-day waiting period before coverage takes effect unless purchased in connection with a mortgage. Explanation: NFIP flood insurance policies typically have a 30-day waiting period before coverage begins unless the policy is purchased in connection with a mortgage, in which case the waiting period may be waived. Option A is incorrect because standard homeowners insurance does not cover flood damage, making flood insurance necessary in flood-prone areas. Option B is incorrect because NFIP is available to property owners in both high-risk and low-risk areas. Option D is incorrect because flood insurance typically excludes damage caused by sewer backups unless directly related to flooding. Question 24. Topic: homeowners policy. Dwelling coverage exclusions. Under a standard homeowners insurance policy in Arkansas, which of the following is typically not covered under dwelling coverage? A. Fire damage to the home. B. Windstorm damage to the roof. C. Flood damage to the basement. D. Theft of personal property from the home. Answer: C. Flood damage to the basement. Explanation: standard homeowners insurance policies do not cover flood damage, and this coverage must be obtained through a separate flood insurance policy, such as those provided by the NFIP. Option A and B are incorrect because fire and windstorm damage are typically covered under dwelling coverage. Option D is incorrect because theft of personal property is usually covered under personal property coverage, which is part of the standard homeowners policy. Question 25. Scenario: commercial property insurance. Covered perils. An Arkansas business experiences a break-in and several pieces of expensive equipment are stolen. Which part of the business's commercial property insurance policy would typically cover the loss? A. Business income coverage. B. Personal property coverage. C. Ordinance or law coverage. D. Equipment breakdown coverage. Answer: B. Personal property coverage. Explanation: personal property coverage under a commercial property insurance policy typically protects against losses to the business's personal property, such as equipment, in the event of theft. Option A is incorrect because business income coverage compensates for loss of income due to business interruption, not theft of property. Option C is incorrect because ordinance or law coverage applies to costs associated with required upgrades or changes due to laws after a loss. Option D is incorrect because equipment breakdown coverage applies to mechanical or electrical failure, not theft. Question 26. Topic: uninsured and uninsured motorist coverage. Arkansas-specific regulations. In Arkansas, if an insured is involved in an accident with a driver who is uninsured, how will the insured's uninsured motorist coverage respond? A. The insured will need to prove the other driver was uninsured before any payment is made. B. The insured's coverage will cover bodily injury but not property damage. C. The insured's coverage will pay for both bodily injury and property damage up to policy limits. D. The insured's coverage will only apply if the insured is found at fault for the accident. Answer: C. The insured's coverage will pay for both bodily injury and property damage up to policy limits. Explanation: in Arkansas, uninsured motorist coverage typically compensates the insured for bodily injury and property damage caused by an uninsured driver up to the policy limits. This coverage applies whether or not the insured is at fault, provided the other driver is uninsured. Option A is incorrect because the policy does not require the insured to prove the other driver is uninsured. This is determined during the claims process. Option B is incorrect because Arkansas allows coverage for both bodily injury and property damage. Um, Option D is incorrect because coverage applies when the other driver is at fault. Question 27. Scenario: Workers' compensation. Employer responsibilities. MS. Roberts, an Arkansas employer, is informed that one of her employees was injured on the job while operating machinery. Which of the following actions is most appropriate for MS Roberts to take next? A. Instruct the employee to use their personal health insurance to cover medical costs. B. Report the injury to the State Workers' Compensation Board and the insurance carrier immediately. C. Offer the employee a lump sum payment to settle any potential claims. D. Conduct a private investigation before filing any workers' compensation paperwork. Answer: B. Report the injury to the State Workers' Compensation Board and the insurance carrier immediately. Explanation: In Arkansas, employers are required to report workplace injuries to both the state's Workers' Compensation Board and their insurance carrier promptly. This ensures the injured employee can receive appropriate benefits such as medical coverage and lost wages under the workers' compensation system. Option A is incorrect because workers' compensation should cover the employee's medical costs, not personal health insurance. Option C is incorrect because offering a lump sum settlement is not part of the legal process for workers' compensation claims. Option D is incorrect because the employer should file the appropriate reports immediately, not delay the process for a private investigation. Question 20. Topic: General liability insurance. Premises and operations liability. A customer slips and falls at a business in Arkansas due to a wet floor. Which type of coverage under the business's commercial general liability (CGL) policy would respond to this incident? A. Products and completed operations. B. Premises liability. C. Professional liability. D. Employer's liability. Answer: B. Premises liability. Explanation: Premises liability, a standard part of commercial general liability (CGL) policies, covers injuries that occur on the insured's premises, such as slip and fall accidents. Option A is incorrect because product and completed operations liability covers claims related to defective products or work after it has been completed or delivered. Option C is incorrect because professional liability applies to errors or omissions in professional services. Option D is incorrect because employer's liability is related to employee injuries that are usually covered by workers' compensation. Question 29. Topic: Fraud and misrepresentation. Contract law in insurance. If an insured in Arkansas intentionally misrepresents information when applying for a policy, which of the following may occur? A. The insurer must honor the policy as written regardless of misrepresentation. B. The insurer may void the policy if the misrepresentation is material to the risk. C. The insured will be fined, but the policy will remain in force. D. The insurer must prove the misrepresentation caused a loss before taking any action. Answer: B. The insurer may void the policy if the misrepresentation is material to the risk. Explanation: In Arkansas, if an insured misrepresents information and it is material to the risk, the insurer has the right to void the policy. Material misrepresentation is considered a serious breach because it can affect the insurer's ability to evaluate the risk properly. Option A is incorrect because insurers are not obligated to honor policies based on fraudulent or misrepresented information. Option C is incorrect because the policy is not required to remain in force when material misrepresentation is present. Option D is incorrect because the insurer does not need to prove that the misrepresentation caused a loss, only that it was material to the risk. Question 30. Scenario: Assignment of policies. Transfer of rights. Mr. Turner wants to transfer his Arkansas auto insurance policy to his adult son. What must he do to ensure the policy transfer is valid? A. Simply notify the insurance company of the new driver. B. Obtain the insurer's written consent to assign the policy. C. Pay an additional premium to include his son on the existing policy. D. Nothing is required. Insurance policies automatically transfer to family members. Answer: B. Obtain the insurer's written consent to assign the policy. Explanation: In most cases, insurance policies, including auto insurance in Arkansas, cannot be transferred or assigned to another person without the insurer's written consent. This is because the insurer evaluates the risk based on the original policyholder, and a new driver may represent a different risk. Option A is incorrect because simply notifying the company is not sufficient to assign a policy. Option C is incorrect because adding a driver to an existing policy is not the same as transferring or assigning the policy. Option D is incorrect because policies do not automatically transfer to family members.